Every day, the world moves on as it always has. Cities wake up, work begins, and life feels familiar. But beneath that sense of normality, something is shifting. The climate is changing, and the systems we rely on, energy, food, water, cities, finance, are under pressure in ways we're only beginning to understand. These changes don't live in reports or projections, they are already shaping people, livelihoods, and communities. We created the Climate Leadership podcast so these challenges don't remain abstract or distant, but are explored through the people working inside these systems, making real decisions with real consequences, often without clear answers. This is not a space for fear, blame, or perfection. It's a space for honest conversations about what leadership looks like in a changing world. If you're listening, you're already part of that leadership. Let's begin the conversation.
Welcome to another episode of the Climate Leadership Podcast, where we explore the ideas, policies, and innovations shaping a climate future. In today's episode, we focus on the link between climate change and the economy. As climate risks grow, they are no longer just environmental issues, they are also economic challenges. Countries are already facing rising climate damage. At the same time, they need to invest in adaptation and reducing emissions. These actions come with cost and put pressure on public finances. This creates difficult trade offs for government and institutions. To help us better understand this, I'm joined today by Mr. William Hynes, Senior Climate Change Economist at the World Bank. He is also an honorary professor at UCL and a fellow at the Santa Fe Institute. William, it's great to have you on the show.
Thanks.
Yeah.
Great to be here.
So, before we start our conversation, can you give a brief about your journey so far?
Sure. Well, I've been working at the World Bank for 2.5 years, and I was part of a group that was hired to really bring climate more into the macroeconomic analysis and dialogue at the country
Mhm,
level, and to ensure that the country economists and the country teams at the World Bank were adequately factoring in things like climate
mhm,
risks and thinking long term about infrastructure needs of climate, both for adaptation and
mhm,
mitigation, and to think about the opportunities that might stem from the green transition in terms of more energy efficient systems, energy
mhm.
security, and integrating nature into more the macroeconomic dialogue. So I've prior to that, I worked at the OECD for about
Mhm.
14 years, and I worked on the New Approaches to Economic Challenges agenda, which was set up after the global financial crisis to really help upgrade our analytical tools, models, narratives, and to ensure that we really do a better job in dealing with the
Mhm.
systemic challenges that we all
Okay,
face.
great to have you with us today. So let's get started. When we talk about climate change in macroeconomic terms, what does that really mean, and how should
Mhm,
policymakers think about climate as an economic issue?
mhm. Well, policymakers have to think long term about the evolution of their economies, and they have to think about the different mega trends and systemic issues that they'll have to deal with and manage. And climate is really a macro critical issue. That's in terms of how will climate change propagate in terms of physical and transition
Mhm,
risks, in terms of heat stress, drought, flooding, all sorts of different physical impacts that we expect that will play out very differently in different parts of the world. And then there's the transition
mhm,
risks because the world economy itself is going to change, it's going to evolve. And that will favor and disfavor certain sectors, certain
mhm,
industries, and certain countries. So the whole trade and investment landscape is going to change in response to this. There's also these risks are going to put pressure on public
Mhm.
finances and obviously adaptation to try to reduce the impact of some of these risks by investing in climate smart agriculture or to climate proof infrastructure. This has a fiscal cost, obviously, and the the mitigation side
Mhm.
of it too. We need to integrate a new energy system relying more on renewables, whether that's hydro, solar,
Mhm.
wind, etc. And again, trying to look at the opportunities that will emerge from upgrading these systems and investing in different parts of the economy. These have all sorts of potential spillovers and positive impacts. So it's there's a lot in this agenda, and there's a lot to consider. And it's important that countries really start planning now and have the tools that they need to really estimate the extent to which these damages will affect GDP, income, poverty, etc., and also to influence budgeting, so climate budget tagging, issues like that, so you know where the money is going in response to these challenges, and different taxonomies,
Mhm.
so to figure out what sectors and activities are green. So the World Bank obviously plays an important role in helping countries through this and to build up some of these tools and systems for dealing with mitigation and adaptation.
Right, right. So, William, I was just thinking like you would be talking to different countries. Uh, do they take the Paris Agreement seriously? And if they do they build plans and implement those changes which were discussed in the Paris Agreement? What do you think?
Mhm. I think they do take it seriously, and I think it's been an evolving dialogue. Um, as at the government level, it's certainly taken seriously, and in the region I deal with, which is Central Asia and the Caucasus, most countries have these systems in place, like
Mhm.
NDCs, nationally determined contribution. They've updated those plans and strategies. Increasingly, they are developing long-term strategies for different issues and how to manage these things. So it's definitely a mainstream issue within
Mhm.
government. Now, a slightly different question would be, well, are ministries of finance taking these issues seriously? Because certainly the environment ministry and the infrastructure and energy, agriculture, those line ministries, they have to take these issues seriously because they need to plan for these changes. But then the finance ministry is maybe looks at these issues slightly differently and maybe in a less immediate way.
Mhm.
And I think we have to think about well, the investment
Mhm.
needs and how the finance ministry will accommodate these needs. How much public resources can it generate in terms of maybe putting a price on carbon or prices on fuels? How much revenue can it generate to meet these needs? But also the private sector in terms of getting in place the right
Mhm.
conditions. And it's also true that the finance ministry it needs to think about the different channels through which the economy will be affected and how climate will affect households, how it'll affect government, how it affects financial system, and also the less tangible risks, the contingent liabilities. It also needs to have a sense of that. What about uninsurable risks? How could it deal with that? What about the social protection impact of some of these damages? Will climate exacerbate poverty, for example? And so climate affects the macro fiscal and financial agenda in many different
Mhm.
ways through many different channels. And it's that's why it really is important that the planning for these issues really starts now, so that systems are designed so they can absorb these shocks when they do
Mhm.
occur, that we adapt as much as we can to these issues, and that when shocks do occur, that we bounce forward, not just
Mhm.
bounce back, but ensure that these systems really are prepared for these.
Right. Right.
issues.
Okay.
So that's a big job for the finance
Okay.
ministry. There's a lot of
Right.
work there.
Right. Right. Okay. So a lot of decisions depend on how we estimate climate damages. How are these damages
Mhm.
currently assessed, and what are we still underestimating?
Mhm. Well, the World Bank's main analytics are called the Country Climate Development Reports, and we've done, I think, over 80 reports around the world, and so that's really thinking hard about the country
Mhm.
context and how these global trends are going to propagate in a national context. So we basically try to estimate different types of climate damage and how serious they would be in each country. So again, that would be many channels, but how would the physical infrastructure be affected through droughts, through flooding, and different climate issues, and we look at the physical infrastructure, we look at human capital. So how will people, workers be affected by these climate
Mhm.
shocks? And they're mostly chronic, but they also have natural disasters. So we try to think about this, and obviously the sectors that would be most affected would be those most exposed to the climate. So in countries with big agricultural sectors, a lot of informal workers, this sector is particularly affected. Obviously, physical infrastructure is also at risk, and so we tried to calculate estimates of how all of these different systems would be affected, and this plays out over a long period of
Mhm.
time. So typically, our models look at the horizon to 2050 or 2060, and we can come up with reasonable estimates, I think, on how the damages will affect
Okay.
GDP and how the different sectors will be affected. We use computable general equilibrium
Mhm.
models and macrofiscal models, and that gives us a sense of which particular sectors will be affected. And from that, we can calculate the jobs
Mhm.
impact, how many jobs would be lost. So, for example, perhaps a lot of jobs would be created in adaptation, in construction, also, maybe as these economies grow, the baseline is that there should be structural change. So maybe there will be climate could exacerbate
Mhm.
that. We might have more jobs leaving the agricultural sector, but perhaps more jobs being created in
Mhm.
services and other sectors. So that's generally how we
Mhm.
do it. And we come up with estimates that vary a lot between countries. In Central Asian countries, some would be talking about a 10%
Mhm.
drop in GDP by 2050,
Mhm.
2060. So this is something that ministries of finance have to take seriously. In terms of what we're missing, we look at specific channels, but in isolation often. And the whole issue, I think, is the compounding
Right.
nature of these
Mhm.
shocks. That, for example, if you have a heat wave and that leads to forest fires, and this disrupts energy systems, power cables might be disrupted, and then this feeds then into a lot of economic and social
Mhm.
infrastructure. So these things can compound, and also when you're hit by a shock, of course, you're less resilient to face another
Mhm.
shock. So I think this is something that we're working on, and it's a difficult challenge analytically to pin down a lot of these dynamics. Tipping points, of course, are another. To try and figure out, for example, how individual countries are going to be affected by,
Mhm.
for example, the shutting off of the North Atlantic circulation. What would be the impacts in Central Asia of this? And
Yeah.
Tim Lenton, for example, has looked at how food output, crop production could actually be seriously affected
Mhm.
by these phenomena. This is a global issue. So, yeah, I think we still also need to think more about the severity of these shocks and worst case scenarios. We tend to take quite moderate scenarios at present, but it's good to think about how worst case what impacts that would have.
Right. Okay. One of the biggest debates is adaptation versus mitigation. How should countries think about this trade off, especially with limited resources?
Yeah, I mean, I don't think there always is a trade-off. I mean, obviously, if you are strengthening your systems and building more resilience, I mean, for example, moving towards more reliable, perhaps the decentralized, localized grids, that will help. Obviously, mitigation because it reduces CO2 emissions, but it can also prepare a community for dealing with some of these shocks. So I think it's not always a very severe trade-off, and oftentimes the adaptation has more of an economic upside than is often considered. And for example, if you bring in irrigation and you manage water resources better for agriculture, this is obviously adaptation to climate change, but it can also boost the productivity and the resilience of the agricultural sector. So it's not that this is all cost. These can actually be investments which generate significant returns. And I think we need to obviously do more on adaptation because this is as the climate shocks get worse, then unless we have national adaptation plans and unless we have these investments in place, then it will be more of a drag on the economy. So
Mhm.
I think we need to put place both adaptation and mitigation in the context of a long-term economic plan.
Right. But like, are we under investing in adaptation globally? And if yes, why does this gap exist?
Well, I think we probably are, and in general, it's more difficult to get investment for adaptation because mitigation is things that investors like to invest in. Big infrastructure projects
Mhm.
with very tangible and very obvious rates of return, even in the absence of climate. Whereas adaptation, you're trying to head off a risk,
Mhm.
and it's just a little less tangible for investors to see the benefit. And I think also it's important to think about the scale of the different interventions. Adaptation is going to be, a lot of what homeowners, farmers, business owners, there's a lot of small scale adaptation that doesn't require big investments.
Mhm.
And so the mitigation you can also do things at that scale, but to really shift the dial on mitigation, you need big energy system investments and big infrastructure. Adaptation, I think, is something we should integrate into infrastructure investments going forward. So we really think about a more risky future and integrate into infrastructure investments this climate proofing
Mhm.
dimension. So it's not quite as simple as uh, just there. It's underinvested in. I think how we do it and the timeframes involved are going to be important here.
Okay, sure. So the transition to low carbon economy comes with significant cost. How should we think about these costs in macroeconomic context?
Well, I think it comes cost in a sense, but a lot of developing countries will have to upgrade infrastructure in any case, and in many cases, infrastructure is absent. So it's not that these are new investments that will need to be made. It's a matter of incorporating, I think,
Mhm.
these issues into your infrastructure spend. And infrastructure spending now is important because you're locking in these technologies and these infrastructures for decades. So it's important that we think long term about what sort of technology we'll need, what will be most efficient in terms of changing prices of energy, and energy security issues. If fossil fuels are more difficult to
Mhm.
source, then that's what you can produce locally is going to be good for balance of payments. It's going to be good for growth and energy security. So yeah, I think these investments probably have good rates of return. They're probably worthwhile, and you're preparing the economy for the future, and you're dealing with a lot of issues, not just long-term issues, but for example, the decentralized energy grids are going to be probably good for poverty reduction. And so you can achieve a lot of social, economic, and environmental goods goals simultaneously. But
Mhm.
yeah, just feel free to follow up if I missed an element there.
No, no, no. I was just thinking, William, like currently in the world, there is a oil shock which is going on because of the current crisis in the Strait of Hormuz. So,
Right.
do you think it will have positive impact for the renewable sector moving forward?
Yeah, I think it's a great question, and I think we are in the middle, in a mid transition between the fossil fuel economy and the renewables economy, and these two systems are going to coexist for some time to come, and that's going to generate a lot of instability. And in the longer term, I think shifting away from fossil fuels makes a lot of sense. I think energy prices are really a political and social issue on which governments are very sensitive to. So the risk is, and we see it in some countries, that we subsidize fossil fuels right now by reducing the energy price. And these kind of subsidies or tax exemptions, they tend to be sticky. They tend to hang around. Once you bring them in, they're
Mhm.
hard to get rid of. And so that's really unfortunate because shocks like this should be reminding consumers and firms that there are risks attached to these fuels and this source of energy, and we should be diversifying the energy. We should be looking more at energy security, and renewables has to be a major part of that. So the shock in the long term, it should push us in the direction of renewables. In the short term, because of the anxiety and the real competitiveness impacts of higher energy prices, it does maybe lead to too reactive strategy, which can actually keep fossil fuels going a bit longer.
Right, right. Also, one more thing. So, I was talking to some other economist in my last podcast. So he was mentioning that United States, which is now focusing fully on oil and gas, and China, which is a upcoming superpower built on renewables. So how will this play off in the long term? And do you have any thoughts about that?
Yeah, well, I think China has obviously it's leading the world in several renewables value chains, whether it's batteries or EVs. It is you do see electrification of its economy, but I think what we also see is that the China has increased its energy production with renewables, but it this hasn't come at the expense of coal. Again,
Mhm.
there's this coexistence. The energy produced by coal
Right.
hasn't diminished; it hasn't been offset. Whereas in a lot of OECD countries, the renewables have come at the expense of fossil fuels. Essentially, it is a transition. In China, it's really more about additional capacity for energy.
Okay.
But it does have
Mhm.
a dominant role in the production side of the green economy, in producing these
Mhm.
photovoltaics for solar, where it's almost complete dominance, but also wind infrastructure. The EV market increasingly has more penetration and is competitive in that. So I think these are potentially the industries of the future. But it's very hard to tell which standard, which energy system will dominate. But
Mhm.
I think we doubling down on fossil fuels seems like a mistake to me because they won't be around in any event. And so the question of whether you want to lead the new or try to sustain the old is I think pretty obvious.
Right.
And I think at the federal level, it's true that the United States has a particular preference for different energy sources. But at the state level, in terms of what firms are doing, I think, we might, some of these things may be past a tipping point where there isn't going to necessarily be further R&D on
Mhm.
fossil driven technologies, and it is potentially, I mean, this is a source of geopolitical competition. There's competition over critical materials, critical minerals, and
Yeah.
I think this again is, I think, all part of this mid transition. It's going to create more instability and uncertainty about the trajectory of all this.
Yes. Yes, William. I think we are in a very important time in the history of the world, because there is a strong transition which is happening currently, and we are in the middle of it, and we don't know where it will head. So, okay,
Absolutely.
okay. So, final question. Yeah. So, final question from your perspective: what role should international financial institutions play in financing climate action, especially in the emerging economies?
Well, I think they have an extremely important role to play. This is in terms of domestic resource mobilization. So, can we design ways in taxing carbon, for example, or pricing carbon through emissions trading systems or carbon taxes? And a lot of countries already have taxes in place which mimic the role of carbon taxes. So they do have excise taxes on fuels, for example. And so they wouldn't be starting from scratch. Um, to do
Mhm.
emissions trading systems, of course, they need a lot of systems in place, like monitoring, reporting, and verification of emissions. So all of these require different capacities and capabilities. And so the World Bank and other IFIs has an important role to play in raising awareness about these issues, and then in carefully designing the policies and systems that they need to implement this. Then on the private sector side of things, again, how can you put in place green taxonomies for investment? Can you articulate your needs for renewables or for green industry, uh, for adaptation, for
Mhm.
mitigation? So to really deal with some of these market failures and clearly articulating what investments are needed. And then increasingly, there are things like climate finance. There are
Mhm.
carbon markets, which are still small, but a lot of developing countries have potential for negative emissions and
Mhm.
offsets. And so, if these markets really take off, then that's a source of would cost in a sense, but of financing. And then there are other instruments like green bonds and debt and so there are lots of financial instruments, and I think you need a financial strategy for climate that makes sense for your
Mhm.
country context. And some can have more public oriented debt. For others that are really have limited space for this, they might need to rely more on private sources. And that's a challenge in itself. So again, all of the government needs to be involved in this. The finance ministry has a particular role
Mhm.
to play, and I think the IFIs are there to support, and in some cases provide the capital, in other cases the know-how and expertise
Okay.
that they need.
So, thank you, Mr. William, for this fascinating discussion today. It is clear that climate change is not just an environmental challenge, it is fundamentally reshaping how we think about economics, policy, and global development. Thank you for sharing your insights with our listeners today. And to our listeners, if you enjoyed this episode, don't forget to follow the Climate Leadership Podcast for more conversation with leaders shaping the future of climate, business, and policy. Until next time, take care and have a nice day. Bye bye.